Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady and principal owner of Everett Tax Solutions, where we help you win the tax game. Home Biz Tax Talk airs Monday through Friday. When you tune in my show, you're going to hear about topics that are important to the home business community. All right. I have gotten my email blown up about this new tax credit. Talk about impatience. During this season, even up until on tax day, I have received maybe 50 emails right around that regarding this particular topic. And so I want to shoot this video to talk about this new credit and how it is supposed to work. So related to ARPA, the American Rescue Plan Act of 2021, Congress created an expanded child tax credit. So let's talk about the child tax credit. We're going to talk about the credit itself and all the stuff that you need to know. So the credit itself is $3,600 for every child under age 6 and $3,000 for every child under age 17. And this particular tax credit does not require that taxpayers have earned income in order to qualify. Now, the IRS is supposed to be creating a non-filer portal specifically for this child tax credit. Now, the non-filer portal is not for you if you just didn't file your taxes. It's for people that don't have a filing requirement. That is two different things. So if you are required to file your taxes and you haven't, you need to file your taxes. If you do not meet the filing requirement, then the non-filer portal will be for you. Now, recent studies have been done that shows that 1 out of every 7 children live in poverty. And the reason the child tax credit was created was to address the rising cost of having children, okay? Which the cost of raising children is one of the biggest reasons why people are not so excited about having children, okay? Because children cost money, all right? Now, the child tax credit was originally created in 1997 to address that issue, the rising costs of having kids, whether it's, for food and diapers and all of that for childcare, that it just costs, right? And so the initial child tax credit was $500 back in 1997. And it was a non-refundable credit. The difference between a non-refundable credit and a refundable credit. A refundable credit can take you below zero, meaning that it will create a refund. A non-refundable credit means you can't go below zero. If your tax liability is $1 and you have a $500 non-refundable tax credit, then you only get $1 of that tax credit. But then it steadily increased until 2017, where it was raised to the max tax credit of $2,000. That first $1,400 was refundable, and it lowered the income thresholds. Now, that $2,000 tax credit is still there. This increased tax credit is only for 2021, okay? Now, what's supposed to happen is that these payments are supposed to be issued starting July 1st through December 31st. If you don't get the tax credit by December 31st, then it gets reconciled when you file your 2021 tax return. So that means that if you don't get the payment between July and December, then if you're eligible, you get the whole tax credit on your tax return when you file for 2020, similar to how it was with the stimulus payment. Now, let's talk about the mechanics of it all, right? So the credit is available for single individuals at $75,000 or less. Married filing joint is $150,000, and I want to say head of household is $112,500. So up to those amounts, you get the full credit, and it starts to phase out. Where the max is $150 for individuals and I'm sorry, $95,000 for individuals and 170 for married filing separate. Those are your completely phased out amounts. So, between 75 and 95 for individuals, you will get phased out up until that, completely phased out at 95,000. For married filing joint, 150 to 170, you will get a reduced amount and then completely phased out at 170,000. There's nothing that you need to do at this point in order to receive the credit if you are eligible. There's also supposed to be a portal for you to opt out of receiving this credit if you'd like, meaning that you won't get the payments of $250 to $300,000 of $250 to $300 per month, depending on the age of your children, right? You can opt out of that and then receive that full credit on your tax return. One of the things that people keep asking me is, should I take the credit or should I opt out? Well, here's what you need to know, okay? The thing about this tax credit is that if you get too much, you could have to pay it back. Okay. Now there is a safe harbor that Congress also created, and it says for families with the 2021 adjusted gross income at or below 40,000 on a single return, 50,000 on a head of household return, and 60,000 on a joint return won't have to repay any credit overpayments. Okay. But if you have at least 80,000 on a single return, 100,000 on a head of household return, and 120,000 on a joint return, you will have to repay the entire amount of any overpayment when you file your tax return for 2021. So the question is, what is your income going to look like? This is a very good reason to schedule a tax planning appointment with your tax professional to see how you can maximize this credit. So yeah, this is not like the stimulus payments where if you receive too much stimulus money, you did not have to pay that back. With this expanded tax credit, you do. Okay, so it's important for you to examine your income to see what is it going to look like. If you don't know, or if you're going to have a problem repaying this credit, then I would advise you to opt out. If you're okay with possibly repaying the credit, fine. So the IRS, they will use your 2019 information if you have not filed your 2020 tax return. Okay. But again, when you file for 2021, if you have received too much credit, and depending if you don't meet those safe harbor amounts, then you will have to pay that credit back. So I highly recommend that you take a look at your income to see where you are, where you plan to be for the year. You may need to schedule a tax planning appointment with your tax professional to help you make this decision, which is totally fine. If you know that your income is going to be below these amounts and you qualify for the full credit, get your payments. And so what that looks like when you file your return, you're going to be asked how much credit you received. You're going to have to reconcile that on your 2021 tax return. From what I saw, the IRS may be sending letters just like they did with the stimulus payments that nobody kept, right? They really should have said, hey, you might want to keep this for your tax filing. But so they're supposed to be sending out letters, telling you whether or not you're eligible and just giving you some direction. But by and large, those are the directions. You will have the payments, from what I understand, are supposed to start going out July 15th, and they have until December 31st to disperse those payments. If you don't get it by December 31st, it's going to be reconciled when you file your 2021 tax return. If you don't meet those safe harbor requirements for the credit, then you will have to pay back any overage of the credit for your 2020 on your 2021 tax return. There are some calculators that are out there now. I think Kiplinger has a calculator out right now that can help you figure out what you may qualify for. And so, yeah, once these payments start to hit, we'll really start to see what that looks like for each individual family. So there's no one right answer for everyone when it comes down to this credit. It's just that you really have to know your situation and and act accordingly. That's for what's going to be the best for you. Okay. So I hope that that helps you out. Oh, the other question that people have in regard to these payments is that $1,400 third stimulus payment. That is going to be reconciled on your 2021 tax return as well. Okay, so the stimulus payment is different from this child tax credit payment. Okay. I did get a question about how these credits will be offset, if at all. And from what I saw briefly, it doesn't look like these credits are going to be offset by any other federal liabilities. However, one of the horror stories that we have been hearing is, stimulus payments were, for private creditors, that money was taken up by private creditors in some instances, and that was not protected. I'll have to look again to see if that is protected, but I'm not sure. Okay, I'll be honest to tell you, I'm just not sure because I'm real tired right now. But anywho, that's it for this expanded child tax credit. All right, so I really hope that that helps you out explaining things how it's supposed to work. Google the tax calculators, the tax credit calculators. Find those to see what you might qualify for. Look out for the portal if you decide to opt out. If you do not have a filing requirement, then you use the non-filer portal to register, since there is no requirement to have earned income. But if you are due to file a tax return, you need to file the tax return. The non-filer portal is not designed for you. Okay, you have to file your tax returns if you have a requirement. Okay, so thank you guys so much, and I will see you all next time. Bye.